How you guys doing today? Let's get started on the market and let's talk about what's been going on with the S&P 500. The S&P 500 has two clear levels that we want to continue to monitor, which is the 404 level here and the 375 level here. The 404 is important because it'll break this downtrend line, break above this important zone where selling has been persistent in the smaller time frames, and we'll push higher. Now, there's a few catalysts that can do that, such as earnings this month, and if earnings continue to come good and there's a good forward guidance, then we can see that this could be very uplifting for the market. Also, technically speaking, we have set a higher low. This low is higher than the previous low, and it's getting very tight as the apex and the price action is getting very tight in this zone here. And we can see that, we can expect a breakup very, very soon. The catalyst for this could be, anything such as the Fed's interest rate decision on February 1st, or it could be, like I said earlier, it could be just the stock market's reaction to the earnings season, or if there even is a breakdown in through the bottom, which is 375, is important that those same reasons could apply for the breakdown as well as the breakout. Now, the triple Q has been hurt the most this year. Everyone knows that. If we look at the triple Q is moving up. This trend line here is still going to be a big resistance level, which is right here. So the 285 level will continue to be on watch. What I'm expecting after this, a lot of buying, nice move to the upside. We want to see a period of consolidation, which may come this week because this is a short week, and short weeks usually tend to be very slow. And sometimes there is rapid action, but usually they're very slow historically. And so if we look at a 2 hour time frame, and the Qs is telling us that this level is a big level. So there could be a lot of supply between 297 and about 300. But however, the big zone, if you guys have been following me, is the purple line here. A lot of selling pressure still sitting here, and we want to see what happens if triple Q makes it up here. So the interest rate decision could really push the tech sector up, and we'll see how that goes. Today, there's a huge announcement or news talking about Microsoft layoffs, so that is not very positive for the tech sector, and we'll continue to monitor it and see how it goes. But so far, it looks like it does want to break out, but not with a lot of certainty. A big level here is 312, and we'll see if we can get a break above that. Now, IWM, on the other hand, IWM is in this zone. This is a zone that I have marked liquidity levels right here, and I want to get above 190 and push up to 192. But this would be a nice move, and we want to see why it does that, right? So if it breaks down here, it will just reverse course, and that breakdown trade would come at the break of 170 or lower. I would not trade anything in between here. These are very, very volatile zones. Now, anyone could be looking at this and saying, hey, man, that's a lot of price move from 187 to 170. It is, but there's a lot of volatility. Whenever you're trading or there's an opportunity to make money, there's always an opportunity to lose money. So always keep that in the forefront, and you'll be fine for the long term. Looking at the Dow Jones, this is what I have, an inverted head and shoulder pattern here that's forming. I want to see a break of this trend line at 350, then a retest and a breakout, which would confirm that this inverted head and shoulder on the daily, we're ready to break out to the upside. And right now, there's not a lot happening with the Dow. Just simply, if I want to see a breakdown play here, I want to see a break below 322 to the downside, and we're headed a lot lower. For now, gold had a nice little pullback. I put this trade on stop loss right about here, 171. We're just getting some consolidation, which is perfectly fine. But what's interesting to note is gold is doing well, which is historically known as the safe sector. So if the safe sectors are doing well, there's something that we want to continue to watch and see how they perform. Okay, and the VIX is an interesting day in the VIX today. The VIX had a gap up, and then it just sold back down. So what we want to see is what happens in the coming days. What I want to see is VIX fall to this level right here, and then fall below 1480, and then fall down to 11, and that would give me confidence that the pain in the market that was expected to come is not going to come. It's just gone to the side, and everything's good to go from here. So that's what we want to continue to watch. But it's interesting to see what is happening with the VIX, and also the yields are down. However, interestingly, they're not down a lot, right? So this is the 2-year yield, and it's barely down over the last couple months. It's just flatlined, right? So this is the 5 year. The 5 year yield also barely down, right? So I have these two levels marked. If this level breaks here, this is what I want to see. That means this would be a good thing for the bonds. So we'll continue to watch that. And interesting to know about the sectors as well, there's starting to see some sort of a rotation. Tech is doing well, energy is doing well, consumer discretionary is doing well, commodities doing well, oil doing well. But what did poorly today was metals, communications, industrials, home builders, and retail. So that's interesting to see. But however, they're starting to see some sort of rotation, which we will continue to monitor. But this is telling us that the economy is starting to reflect some sort of rotation. But however, we need to monitor this for the next few weeks before we make any kind of conclusion, because it takes a long time for these things to pan out. And interesting to note as well, ARC is starting to rise, but I would not touch this. But K-Web is something that I am watching, and K-Web could be a play of the year. If it breaks out of 40, it's going straight up to 55, and that could be a big play out of China, because as we can see, K-Web is sitting in this long-term accumulation zone. So that is something that we must continue to watch and monitor. If you guys like this channel, please like and subscribe. I'll see you tomorrow.